One of the most specific laws that we see in the California Labor Code comes in Section 351 that specifically delineates how tips and service charges are to be handled for employees. Tips are the exclusive property of the employee, him or herself. An employer cannot require an employee to share tips, to pool tips, or to require them to participate in a management sharing program for those monies that are received. A service charge is typically what we see when a restaurant instills a charge on the final bill, usually for parties of 6 or more or something along those lines. In those circumstances, the law views the service charge as the property of the employer, part of the employee's wages. That is not a traditional tip, and it is not treated the same way as tips when it comes to the California Labor Code. However, under the Internal Revenue Code, it's very important for employers to remember that those sums that are collected must be indicated as part of your gross revenue. You must list what those service charges are. If you're sharing a portion of that service charge with the wait staff, with the maitre d', with the back office, that also needs to be tracked down to the penny as to how you're splitting those charges. Where this comes into play most often is where the sum being paid to the employee is shown on the wage statements. Service charges would be part of the wage that is paid to the employee. Sums that are paid as wages are subject to regular taxation, including FICA and FUTA, Social Security, Medicare, and state income taxes. On the other hand, tips are handled slightly differently, subject to different FICA retention and deduction requirements. They are still subject to Medicare, Social Security, FUTA taxes, and state taxes, but the FICA gets calculated differently. So it's important to make sure that you're making those distinctions. Also remember, a key distinction between service charges and tips is that a tip is a voluntary payment by the consumer to the service staff. Under that threshold, that is the only thing that is considered a qualified tip for purposes of that $25,000 maximum deduction that your employees may receive. Service charge payments that are paid through wages do not count towards the $25,000 of non-taxable income for your employees. Obviously, this is going to potentially put businesses at odds with their employees because they want to maximize their non-taxable or deductible wages so that they receive more money back at the end of each tax year on their tax return. So be very careful to make sure that you're explaining and setting forth expectations for your employees early on in writing, laying out the differences between service charges and tips so that they understand what will and will not be a qualifying tip for purposes of their tax deductions. The W-2 form for 2026 has been updated, and it is imperative for you as the employer to begin tracking under a different code both qualified and non-qualified tips if both apply to your businesses. That means that in addition to their regular wages listed on their wage statement, you should have one line item for qualified tips and one item for non-qualified tips. This would include other compensation that comes to the employee throughout the calendar year. This is going to be important because if we mess this up, the employee will receive a W-2 at the end of the year that has inaccurate tax information, and they may not be able to take full advantage of the $25,000 tax deduction on their personal income taxes the following year. So please sit down with your payroll company to ensure that you have these numbers properly delineated and that you have separate line items on every pay stub to ensure that you're tracking those qualified tips on an annual basis.